It's great to be here. Thank you for inviting me, and I'm really honored. One hallmark for any good presentation, it has to be short, so I won't take much of your time. And I'll really encourage to have an interactive session. I'm looking forward to it. Any questions you might have on it. So I'll give you, it's a three-part presentation. The recent trends in research and finance. I'll talk briefly about two of my recent research. One is under review, another is coming as a book chapter. Then I'll talk about trends in finance, which might, if you're a management student or a finance student or accounting student, might help you. Then I'll talk, if we have time, I'll talk about trends in undergraduate and graduate education. So let's start with. So there is a software, I don't know if you're familiar with it, it's called WordIt. So you throw in a lot of data in it, and it blurts out things which appears the most. So this is something I had shared with the econ students before. So this is, I'll show this here. So this is the most commonly used keywords in research. That is the most research topics in finance in the best top journals. It's called JOD journals, or Journal of Distinctions, between 1996 and 2015. So, the risk is a big part of it, and I think it picked up a lot since the 2008 recession. Then you have something called corporate governance, which I'll elaborate a little bit. Then you have liquidity, equity, stocks, and pricing, options. So these are the areas which have the trends in research has been. A lot of changes have been into the tools which we use to do this research. So we are moving into more, we will see big data and machine learning. So I'll talk briefly about those things and how I don't know how to run machine learning, but I can do some applications of it. So I'll give you some examples. So first, let's briefly give an idea about corporate governance. So this is a classic objective function. You might have seen it. The objective of a firm or shareholder is, or a financial manager is shareholder wealth maximization, right? So if everything in a perfect world with perfect information, this is how it works, right? So managers are answerable to the society, the bondholders, the stockholders, and the financial markets. They reveal information from time to time. They don't hide information. They try to maximize shareholder wealth, work on behalf of shareholders. But in real life, in the real world, things don't work like that. I mean, there are a lot of leakages and inconsistencies. So the model I'm showing is the true model. So what can go wrong? So everything here can go wrong and has gone wrong. So in fact, in real life, stockholders who are the owners of the firm, right? If you are a shareholder of a company, you are part owner of a company. But even if you are a 5%, 6% owner of a company, you still have very little control over the managers. If the managers decide what to do, it's kind of gets done. And managers put their interests above shareholders. So in many cases, managers prefer to have private jets, country club memberships, pictures of Monet and others. So the money which is generated belongs to the shareholders. So they might be exploiting shareholders. So there is a lot of theory which goes into this. So the first thing I'll talk about this is who is the institution which serves as a liaison between the shareholders and managers. It's the board of directors. So the board of directors has to be effective. But in real world, we'd see board of directors are not very effective. Things have changed since past 10 years. It has been better for the shareholders, at least as far as reforms in board has been. But just to give you an example, this is what is called, these are the JP Morgan Chase, which is a large bank in the US. The city I'm from, Columbus, its commercial headquarters is in Columbus, Ohio. It has an office building which holds about 40,000 people. That's a lot. I mean, that's a huge area. And so if you look at the board, so for example, CEO from company A sits in the board of company C, and CEO from company C sits in the board of company A. So these are called interlocking boards. It creates a conflict of interest. Plus, if board members are, if company managers or board members are sitting in different boards of other companies, they don't have much time to really monitor the manager. So that's one criticism. But also, even if you have a very nice board, things can still go bad. So let's, this is, can you guess this Indian company? So this got a Golden Peacock Award in the UK for excellence in corporate governance in 2008. UKTI, I don't know what this is, but for CSR, it got an award for that. And award for the best internal audit of an Indian company from Institute of Internal Auditors, USA. Any idea which company is this? No, it's not. PwC is the auditor. I mean, I don't know if PwC was the auditor, but what company? It's not a financial company. Okay, I'll show you in the next slide. You must have heard about the company, but I'll show you the board was also very good. And here it is, Satyam. Okay, and before it kind of ran into the crisis, it got all these awards, right? And in fact, the board is also great. I mean, you have the first two people are insiders. We call it insiders who are involved with the company, or the managers, or the promoters, but the rest mostly are outsiders. You have former director of IIT Delhi. You have Vinod Dham, who's a co-founder of an Intel chip. Krishna Palepu, I know him personally. He's a corporate finance expert at Harvard Business School. Then Dean of the ISB, Hyderabad. And Mangalam Srinivasan, who is an advisor to the Kennedy School of Government. Even with the stellar names of the board of directors, only the two control the board, the top two. And you know, like the massive fraud which Satyam delivered to the shareholders, right? They falsified statements, said that they had this much money, but they didn't have. So again, what I'm trying to say is even a stellar board with powerful names cannot prevent what managers want to do. Apart from that, in the US, what happens is typically if a company is not doing well, chances are if the company is underperforming, so say a company has the potential to be a $100 stock, but the company is going at $60 for a long period of time. So in that case, what happens is it could be a private equity investor who invests in private companies and public companies, or another company who you might think, well, I might want to buy that company for $80, and then, you know, come and fire the managers and realize the potential of $100 or more, right? So these are called takeovers. You know, usually takeovers could be amicable, like Microsoft bought which company? Anybody? It's very famous. I think you start using it, or maybe some of you have. No, Hotmail, they did it long back. No, few years back. I'd say 4 or 5 years back. It's LinkedIn, so they bought LinkedIn. So you'll be using and use LinkedIn. You know, you'll use it for networking. I encourage. So, but LinkedIn is an example where it was amicable takeover. But there are a lot of cases where takeovers are not amicable. And when a company is taken over, first thing they do is they fire the managers. Of course, they're not doing their job. So what companies do is they impose a lot of anti-takeover provisions. So you cannot do this. If you want to take over it, you face a lot of hurdles. You cannot fire a manager. There are things like poison pills and stuff which get invoked when a company gets a takeover threat. So my research is on that. So I'm trying to see whether managers who are entrenched, that is, they're protected, not easily being able to fired, or they're their own boss, shareholders have little power. Those companies do a better job, or companies do a better job where the managers are always on their toes, so that they cannot take stupid decisions and they have to work well. Okay, so my topic is innovation, governance, and competition. So it's under review at a management science journal. So let's hope. It got rejected in one of my finance journals, but maybe I'll be third time lucky. So I don't know. So the way it works is, so I develop, and again, with a co-author who is a mathematician. I mean, he's an economist, but he's more of a mathematical bent. I'm more of an empirical. I work with data. So we created a model called a carrier concerns model, where a manager at time zero decides whether to make an innovation decision or not, right? And if the decision is succeeds, then he's rewarded by the shareholders and the board by higher salary, and it's career concern. So if he is more successful, he'll have a better chance increasing his lifetime or her lifetime career income, right? It's like a track record, right? Like Pujara or Virat Kohli, you have to be really consistently very good. So, but sometimes if you're afraid to if you're not a very able manager, if you don't want to take the decision, okay? Because if you fail, you'll be marked as a failure, right? So you don't want to come and bat it the first, as opener, because that'll reveal your weaknesses, right? So same with this manager. So they decide whether to innovate or not. And the curious thing is, only the market won't know whether the manager has made a innovation decision or not, but they would be able to see if the decision fails. Okay, so it's interesting. Sometimes not making an innovation decision could be a solution if the manager wants to increase its lifetime income. So we're trying to look at what, and we kind of divide the governance into two parts. We call companies where shareholders have good power, at least the balance of power is shareholders have some answer or some power over the managers. We call it democratic. And the shareholders who are, and the companies which are more like Donald Trump type, they are called autocratic, okay, where the managers have most of the power, okay. So, the way I create is I use something called the governance index. It's a very popular index. Came up in a journal called QJE, Quarterly Journal of Economics, the top-ranked economics journal. So what they did with this based on anti-takeover provisions. I remember, right? Takeover provisions. So if a company has takeover provisions, you can't do this. If you want to do that, like dual class shares. So the owners might have shares which have 10 times more voting rights. Facebook, for example, Mark Zuckerberg has 12% shares, but each share has 10 voting rights. So it's impossible for anybody to remove Mark Zuckerberg from Facebook. Okay. Now, maybe Mark Zuckerberg is brilliant and he's doing a great job, but you don't want that for every company, right? Maybe Apple, Google, you might, but not for most companies. So if you have those kind of stuff, then in some cases, the chairman of the board and the CEO of the company are the same person. I mean, that doesn't make sense, but there are a lot of cases. So if you have those kind of things, you add a point to it. Okay. So it's on a scale from 0 to 24. 24 means manager, it's absolutely all power, autocratic. And if it's below, I would say below 10, you'd say democratic, where shareholders have good amount of power. So I divide those into so it's a governance index. So higher number means poorer or weaker governance in the form of shareholders, right? Now, managers have their say too. They say, well, if we are in constant threat of getting fired and stuff, we can't take innovation decisions, right? I mean, we need some protection from the shareholders, okay? So there's a big literature, and we look at it. Then we look at the empirical data, what the empirical data talks about. So the way we measure patents is in a unique way. So patents, it's kind of a measure of innovation. There are different other measures, but patents show how good, it takes an effort to come up with a patent. But it's not just the patents. What is more important is site-weighted patents. And I'll give you a brief example. So you can write a journal paper. In fact, anybody can write a journal paper and maybe get published in so many different journals. Okay, there are so many journals out there. Well, not everybody, but still. But how good a journal is depends on something called the impact factor, right? So for example, if you're publishing in the QJE, it has a fantastic impact factor. That means that journal gets cited by so many other journals, right? So same with patents. How do you know it's a better innovation, it's a good innovation? The number of citations it gets. There are self-citations too. So if IBM is coming with a patent, a lot of other patents by IBM also self-cite. So we kind of take account of all those. So we come up as our measure. Also, there is another element called competition. More competitive industries have more pressure to deliver, so there is more incentive and stuff like that. So coming up with that, we ran what is called the lowest smoother. It's a locally weighted kind of regression, but non-linear. And we find that there is a negative relationship between the governance index. As I said, the larger number means poorer index, a poorer governance. So there's a negative relationship between the patents measured by site weights and the governance index. So, and then we went ahead and tried to verify with our econometric methods. So this is table 2. I don't know how many of you have done econometrics, but some of you will do. But negative significant coefficient, for example, here on the governance index means increase in governance index. That is, as you move from better governance to poorer governance, reduces innovation. So negative, that's what I found. So is it all across the board? So in the next slide, I introduced competition. So what happens if I divide the data set into 2? One is more competition and less competition, and what happens then? And I find something unique. So this is the model. It's a Poisson model. It's a nonlinear regression, and this is what we get. So if we run it from the all sample and include competition there, right? I still find that the governance index has a negative relation, which is fine, right? And in fact, if it's low competition, we still have that relationship. But if we have high competition, we actually find there is, though it's negative, it's insignificant. Okay, so our model, we built our model based on our empirical results, though it should be otherwise, the other way around. But we did find that, well, if it's high competition, the managers are already motivated to work try to be competitive, try to innovate and stuff. But if there is low competition, it's like, think of a monopoly, right? It has no competition. It's only then there is less pressure for them, or less innovation for them, less incentive for them to innovate. So, and that's where the effect of corporate governance is felt the strongest. So if there is a stronger corporate governance, it kind of forces or incentivizes the managers to work on the basis, work harder. So that's one paper. So it's this is one. So some trends I'm talking about. One is machine learning and AI. There has been a lot of application in machine learning and AI, and the reason is available of big and very big data. Okay, in fact, it's been using everywhere, and some of the things you need to know to learn machine learning, and like Python and R and other stuff, which even I have little idea about. Well, I know a little bit, but not as good as, because when I graduated, I did stuff with Stata and SAS, but now everybody who is graduating 10 years hence, they all know about R and Python, which I don't know. But at least there are some ready-made packages where which you can use to actually look at big data. So one example is it's an interesting trend, and it's called the slow iPhone phenomenon. So you see, this is the Google Trends, and if you go to Google Trends, you can search a keyword, and it will show you how much of the search is happening. India World Champions. If you do it, before the World Cup, you might see it spike up, right? So this was the search of slow iPhone, and there were like these pockets, where the search actually went up a lot. And what was it? It was actually the time before the next iPhone was released. So for some reason, people, when there was an impending iPhone coming out, people searched if their current iPhones were slow. So they were so this has been used for many other, not just iPhones, but for auto, cars, trends, consumer trends, and stuff like that. So this is a non-financial application of big data, but big data has been coming in a big way. One of the reasons is machine learning allows you to look at factors and variables and interaction among variables, which was not possible with simple linear regression. So it makes it, at least it looks at different models and tries to give you a different picture of what is the big story. There are a few other things. FinTech Revolution, you have been increasing use of artificial intelligence bots and blockchain analysis. So in fact, financial bots have been very popular. So now you have financial advisors who are not human. Okay, So though you have the website, you're chatting with somebody, but that person is actually a bot. It's amazing the way the bot technology has gone. So I have what is called a Skype Lite, which my father uses to call. I don't know if you know Skype Lite. Anybody? And there is a bot there called Ruh, R-U-H-H. It's fantastic. That person, even if you give hints about Hindi movies or references which are very typical Indian, that AI learns. It's machine learning, so learning for everything, right? Could reply very soon, almost immediately, and they have a sense of humor, so it's become more, human. So that's a big revolution: AI, bots, and blockchain, and digital-only banks. So now I have banks where it doesn't have any physical existence. It's on the web. You do have a customer service representative, which I am pretty sure after a year will be replaced by bots. But there is a company. Me and a couple of my friends have a company, and we were trying to open a bank account. And there is a government shutdown going on in the U.S. So the Internal Revenue Service, unfortunately, is closed. At least they're only working. 12% of the workers are working. So we're trying to get something like an Aadhaar card. It's like an EIN, Employee Identification Number, and they needed the PDF, the actual document, to be faxed to them. We couldn't find it. So we were searching, and there was this bank called Aslo, which allows you to open a business checking account with free checking within a day. So that's amazing, and this is a digital-only bank. No account, every transaction would be online. They have mobile wallet and everything. But it's amazing the way technology is improving in finance. So then regulation tech. So though U.S. is known for small government, there is a lot of regulation in the U.S. You have antitrust policies. You have very powerful FDA. The medicines which are not allowed in the U.S. are available in India. Sometimes there are some medicines. I have my friends who are in U.S., Indian friends. They have been prescribed medicines which you can't find in the U.S. because the FDA doesn't allow it. So they tell me to, when I come here, you can buy medicines without a prescription here. I don't know it's good or bad, but at least they get their medicines when I get back, right? And of course, treat me with some Indian food, right? But regulation, there's a lot of regulation which goes into it, and tons of regulation. And I'll give you an example how much regulation, just the federal regulation is there. So for example, as of January 9, 2019, again, it uses machine learning and what is called NLP, natural language processing techniques. So looks at words like must, have, restrictions which prevent, said, should, must, so looks at it and looks at how many restrictions are there. So as of January 9, 2019, there have been 103 million restrictions. And if you are a fast reader, reading 250 minutes of words a minute, full-time job, 24 hours a day, eating nothing, it will take you 3 years, 109 days, 2 hours and 3 minutes to read all, right? So it's amazing, but with the advent of regulatory tech, it's much easier for companies and institutions to get the correct regulation, what to do, what not to do, and stuff like that. So my second paper, and this is about, depends on industry. So my second paper is about innovation regulation. So again, I use the same measure of innovation, patents, site-weighted patents, and regulation. There is an index created through machine learning, created by an organization called QuantGov. It's an offshoot of, it's a unit from George Mason University. And they use natural language processing and machine learning to come up with the regulation index, how stringent are the regulations per industry. So I use that, and it's briefly, this is, I think, the blue ones are the patent counts per industry, and the red one are the regulatory stringency index. And you see in some cases both are together. Like the low regulation means low patents, but in many cases you'd see actually higher regulation leads to lower patents and vice versa. So, but again, pictures only tell you a part of the thing. You have to analyze it and put it in a regression model. And this is kind of the theoretical model I created. It's a convex and concave function. If you're econ, you might be able to realize it. But what's interesting is I find a inverted U-shaped relationship between regulation and innovation. So as there is more regulation, initially regulation helps companies to innovate because it reduces competition. Okay, you don't want always the big companies to prosper. You want small ideas. So initially, the regulation and innovation has a positive relationship. But as more and more regulation is piled on, the cumulative effect of regulations could be very costly. In fact, I see a downward trend on that. So again, if you look at the number here, I find a nonlinear kind of a inverted U-shaped relationship between. So small levels of regulation or industries which have smaller regulatory challenges or restrictions, those companies, industries tend to do better on innovation. But as there is more and more innovation, more and more regulation, the innovation appears to taper off. So that's another. How much time I have? Okay, but just briefly, maybe 5 more minutes. So what do you have to do to differentiate yourself or get a job right after undergraduate school? So you have to be very proficient in Excel, Microsoft Excel. That's actually one of the things employers in the US, at least, they look for our undergraduate students. Undergraduate means college students, okay? And these are some of the stuff which you can do actually through Excel. It's interesting because I was going through that, I was talking with some of the faculty that you have a system where you can get internships. And I met a couple of students, or a few students who do internships. So that's great. It was unthinkable when I went to undergraduate education here. Even when I went to JNU, first year there was no chance. Second year you can get some kind of internships, but that's still rare. But here, if you're getting it, that's fantastic. So, if you can put in some experience before you graduate, that'll be great. Okay, even if it's unpaid, if you're shadowing somebody in a company, that still works. Okay, and again, this is something this is Benjamin Franklin said like, tell me and I forget, teach me and I remember, involve me and I learn. So, more of experiential learning, maybe case studies, role playing, simulation. Bringing other companies coming in, describing their problems, and you try to give a solution. So those are things which are I think, very important. Okay, so I don't need to talk about graduate education because nobody is interested here on graduate, at least now. But it's been a pleasure here talking to you. So if you have any questions, let me know. Okay, anything doesn't have to be related to this topic. Again, doesn't have to do anything with my presentation. Anything you want me to ask, So, I mean, related to economics and finance, yes, hopefully, yeah.
Because Professor Roychoudhury spoke in our department in the morning. So in the afternoon session, I think the opportunity should go first to the management students. Please speak out.
Yes, go ahead.
What are the trending financial models we need to learn in our course curriculum or apart from that?
Okay, so there are about 5 basic financial models you would learn always, and anywhere, not in just here, US or here. One is what is called a discounted cash flow model, which is used to value assets, companies, bonds, any financial assets. Okay, so DCF model, there have been a lot of variation on that. So that's one kind of model you do. the second model is forecasting. So creating common size, this is more related to accounting, but creating pro forma and common size business statements from where you can project next 5 years of financial statements, try to balance them and come up with free cash flow models. Then there are models which are popular, but I mean, it's difficult to implement, and I wrote a teaching module on that, which got published recently. That's on value at risk. You can actually use Excel to find, so it's a risk analysis, risk management. Excel could be a very good risk management tool. So value at risk. What other models? Yeah, so DCF models are still the most popular ones. There are models which are effectively not very popular in undergraduate, but any option pricing models like Black-Scholes or binomial tree models are also very useful. Okay. Yeah. But
And
yeah.
apart from that, in programs like R and Python, what are the models can be built in order to think as if anybody who have idea in about R and Python, and he want to build some models in that, financial models, but will that be appropriate for him to pursue R and Python, or it can be done in Excel also?
Well, if you, I would say Excel, like now you'd see in like next 5 years, most people will be pretty proficient in Excel, but there will be still people who are not. So if you know R or Python and show that in your CV, along with Excel, I think that's better. It's always better. You know, what typically we do is when we run programs or like in some scripting language, we try to recreate in Excel also if you're getting the same answer. So Excel could be used as a check. Yeah. But if you are able to do it, build a model in R and Python, it's very flexible, it's more strong, you can work with more amount of data. Yeah, I would say go for that. Yeah.
Thank you, sir.
Anybody else? Yes. Anybody else?
So I do hold couple of shares in bank.
Okay.
So as you talk about the trend of AI, like, couple of apps are available for the prediction analysis and all. So which one you think much more efficient and reliable? Like those apps, or should I go and consult with some other persons?
Oh, those like banksmen's.
Yeah, there's more like brokers are there and all kind of stuff. So which one you will suggest us, like for small investors? So we should see the apps and based on those predictions, should we invest or should we talk to them?
Okay, the stock picking ones.
Yeah.
Okay, so the apps I was talking about were more about, say, retirement planning, tax investments and stuff like that. Well, there are a lot of, you're right, there are a lot of bots. You can actually, in fact, in the US and I think in India also, you can actually buy bots and allow it to trade on behalf of you in the foreign exchange market or the stock market. So again, I mean, in fact, the jury is still out. We don't know. I mean, if you have a good bot, because they're rational that way. They don't have any emotional, they don't get afraid when the market is dipping. And so, but if you have an advisor, even the most stringent advisor might be susceptible to animal spirits, we would say. We have risk aversion and everything. So I don't know. Again, I mean, those hedge funds, they use bots a lot. High frequency computing. I think it's still not a situation where you can leave everything through the bots. It created the flash crash a few years back when stock market dropped 20% for 5 minutes and then again went up. Like a lot of companies dropped. So not the whole stock market, but some companies. So I would say maybe we are still not in a situation where it's all robots. So, but maybe in the future, who never knows. But definitely there has been an increasing trend of using bots in investing, yes.
So,
okay.
They are actually based on some basic models. If the models, if the regime, which is actually the model, if the regime works, then actually the model works. If the regime fails, and the situation could be like that the regime fails, then no model can actually go for predicting this one. In 1997, so far as I recall, in Asian Development Bank published a report they predicted the growth rate for certain economies, including the Thai economy. The prediction was that the Thai economy will grow at the rate of 8%. And that year, in 1997, it nosedive. This was simply because George Soros entered into the Thai market and created a situation out of which entire Thai economy collapsed. To me, it could be interpreted like this, that the regime based on which the Asian Development Bank predicted an 8% growth rate. That regime was spoiled by a person called George Soros. And therefore, the entire model actually did not work. This kind of model could not work since the regime failed. And therefore, this kind of thing could develop and no one cannot predict. Maybe you must know how the regime should change, what could be the logic in the change of the regime and all this. But this makes things more complicated, that I understand.
Yeah. And these risks are called systematic risks. So risk which can affect everybody, but it's often the sources of systematic risk, like George Soros, cannot be predicted. So yeah. Okay, thank you so much. It's been a pleasure here and great to come back to my city. And yeah, I think
there are
somebody.
Yes.
Yeah.
Yes, sir.
This is a question related not to your economics or
Sure.
finance, but related to innovations.
Okay.
Say every university now wants to, have more innovative minds. So how do you correlate innovation versus our evaluation system, like evaluation system in Indian universities?
So
Do you think that evaluation system has a, something to get innovative ideas from the students?
So that's interesting, and it's been very.
Getting high grade, guardians want high grade, students want high grade.
What I have seen is it's us Indians who have a fascination about high grades. Seriously, when you put your name, and even if I'm getting an Indian CV, they actually say first class first or first class second with 93.2%. Nobody cares about that. They might. If you're in academics, maybe while getting into a good university, it might. But in the job market, at least in the US, they don't. They want to see how you did in your job. So, but it's the big fascination for Indians, Indian parents, that their kids would do very well. There are some advantages. We are better than, I would say, an average American, an average Indian. Urban Indian is better than an average American in as far as quantitative ability or math is concerned. And so we have been very successful when women's like Indians, Chinese, the Russians, who have a relatively harder childhood. I don't see it harder anymore, but we have to study a lot, right? But the dividends you guys get is good. I mean, they typically do very well. Yeah, and one of the thing is, if you do spend a lot of time in doing all those math, and which is not bad, I'm saying, but do a lot of homework and stuff, be always pressured and stressed out, it doesn't give you that creative, avenue. So Americans see all the big companies which have come up are actually by people who either are immigrants but have studied in the U.S. or have been the U.S. innovators themselves, right? So I think, but now I think the education system in India has changed a lot. That's what I've seen. I've heard from my colleagues, my friends whose kids go to school, that there has been a lot of emphasis on not giving a lot of homework, not making it very competitive, which I don't know. I mean, in US, when you go to school, they don't give you a grade. They don't say you are first, you are second. Things like Bhavishwajyoti would not happen because they couldn't tell you are the best and you didn't come. It's impossible. It affects kids' minds and stuff. I find a little bit bullshit, but still, it's, so there is less pressure, less competitive pressure too. So it has to be a kind of a balance between that. There should be competition, shows you should be making yourself more valuable, more skillful, so that you should be able to, do stuff. But at the same time, you need to also be creative. So if there is and I don't think the U.S. system and the Indian system, both education system has found that sweet spot. In the US, though, I would say there is an option like we used to have when we were kids. When my parents grew up, you have a concept called double promotion. In the US, it's still there. If you are a kid, if you are doing great in math, you are horribly bored when you are sitting in the class and they're doing the same basic math, there's a chance you can take higher level math or just skip grades and go to higher level so that, it's... and it's possible for US, even if you're in the same, say, 10th grade standard, you can take a higher level math. It would count to what is called the AP credit and stuff like that. So I don't know. I have been in touch with the US Indian education system for a while, but I heard there has been a lot of changes. At least some of my friends whose kids go to schools in Bangalore. It's the Kolkata schools, they said. They are always the toughest. They put the most, pressure on the kids. I don't know. Yes. But I didn't. Now, ignorance is bliss. So I thought that was how it worked. So I didn't have any complaint. I had a lovely, fun childhood. I wouldn't have traded anything. Like I went to Hindi high school, which is called Birla High. I had fun for 12 years. Yeah. There was pressure, but I didn't feel like everybody is having pressure. If I have somebody who is not working, I'm working, then you might feel okay. But I would say this is the norm, right? I didn't know about. Now, I'll be spoiled or pampered if I was in US, if I don't have to do much. But yes. Go ahead.
What is required, I think, is abstract reasoning. And that is something different. But anyway.
But yes, creative thinking and those things are very much in the...
This comes along with abstract reasoning. In Indian education system, we put much emphasis on abstract reasoning. When someone was speaking about interest of the manager and interest of the shareholder, I was immediately thinking in terms of the interest of the stakeholders, and therefore there should be some principal agent problem. This kind of understanding comes to me simply because I tried to abstract out of the description which came up here. I think that benefited a lot in India, particularly the persons who were educated in India. This is the thing. But Professor Pal, you have a question.
Yes.
Actually, I want to have a very brief overview of blockchain technology. I know it may take a long time, but just highlighting how it can be applied in accounting and finance.
Well, I don't have really much idea about block because I was asked the same thing in the previous presentation. Well, the blockchain, the application of blockchains in banks are supposed to reduce frauds and the time for transacting any transaction. But beyond that, I don't know. I mean, somebody was talking on whether cryptocurrencies using blockchain technology can replace currencies. I have no idea on that. But this is one area that boat has passed for me. I wish I had, because when cryptocurrency idea came up, I thought it's a fad, right? But fad, like it's just a fashion type, but it really kind of built on last year. But I have heard that a lot of cases, one of the major improvements would be on the trading system and financial transaction. And I know banks in JP Morgan Chase, Bank of America, are hiring people who have this fintech models and blockchain technology. So I think fact is they probably don't understand a lot about it, but they don't want to be the last one to embrace that technology. So they want to be still in the cutting edge. So, well, if it's implemented, if the world picks up, they should be also on the forefront to embrace it. But I'm sorry, but I can send you some literature on those. Like there is a colleague student of mine who is in Freud Atlantic University. He's like expert in blockchain, so I might be able to send you.
He will be available in next June. I have invited him to come here in our department, and during that time, please keep in touch with him so that you can get.
Yeah, one of the perks in US universities is you have a 3.5 month summer holiday. So not the best time to visit Kolkata, but I'd still try to spend like 2 months here. So.
Okay, thank you, Professor Roychoudhury.
Okay, bye.
I think, yes.